We're living through a financial change that, to be honest, not many people saw coming, but a lot of people hoped for. We can see how quickly the world of banking is changing right in front of our eyes. Traditional systems have been in charge for a long time, but now digital assets are taking the lead and changing the way we think about money, value, and trust. People will remember this moment for a long time. People on Wall Street and in the cryptocurrency world were shocked by the recent secret leak from the halls of the United States Congress. People in the public, the media, and investors are all scrambling to figure out what this news means in its entirety. People in both traditional and digital markets are working hard to get ahead of what could be a major shift in history. The news has led to heated arguments, wild guesses, and a lot of activity. The leak shows that Ripple's native digital asset, XRP, has been legally approved as collateral for all US government debt, a move that has never been seen before and could completely change the rules of global banking as we know them. This move marks the start of a new era in which cryptocurrencies are not just investments but important parts of the strongest economies in the world. No pun meant. The effects could be huge, affecting everything from trade between countries to how they handle their reserves. To fully understand how big this event was, we need to take a step back and see how it fits into the bigger picture. The market for US Treasury bonds isn't just another part of finance. It affects everything from interest rates to the value of the dollar. We're talking about a market that supports not only the American economy, but also acts as a model for financial markets around the world when we talk about how big and important the US Treasury bond market is. People, businesses, and governments all over the world use US Treasuries as a way to measure how safe and stable something is. With over $33 trillion in bonds still remaining, it is the world's biggest debt market. The fact that this huge number exists shows how much faith and confidence investors in the United States have in its ability to keep its promises. In the past, these bonds have been the mainstay of stable finances. Because the US government backs it up, it is seen as the safest purchase money can make. Central banks, pension funds, and other financial institutions use them as the base of their investments because they give investors peace of mind, even when things are going badly. At this point, the market is about to switch to the XRP system for the first time ever, using XRP as its main collateral asset. This change could completely change how value is sent and stored, starting a new age of speed, openness, and creativity in global finance. This is not just a guess. Several reliable sources have confirmed it as a fact. A video going viral of a 100 bill on fire showed a hidden XRP hologram inside the bill, which was one of the most convincing pieces of proof. This is a meaningless but significant sign that XRP is changing the way US dollars are used in a new and important way. At the same time, stock tickers all over the world were showing red to show that the prices of US Treasury bonds had dropped in a way that had never happened before. A lot of people in the financial world are shocked by this quick and dramatic drop. Many experts are calling it one of the most important market events in recent memory. Market players reacted quickly and strongly to the news. Traders rushed to change their positions, and investors are closely watching how things are going on trading floors and news screens. When there is this much chaos, it's clear that investors are quickly moving their money around to find safer or more innovative investments as uncertainty and volatility rise. Today, more and more people are turning away from traditional debt products like government bonds and towards XRP-backed digital assets, which are seen as a better option in today's changing financial world. A private JP Morgan Chase letter that was just leaked to the public has given this huge change even more weight. It has caused a stir among both large and small investors. The memo says that the bank is now publicly accepting XRP as collateral for overnight loans and repurchase agreements. This is a big step forward for a big bank. People are calling this choice a turning point for the use of digital assets in mainstream finance, and it's already having an impact on the whole field. In an interesting turn of events, Jamie Dimon, CEO of JP Morgan, is said to have bought 1 billion XRP tokens quickly as the news spread, showing how important and urgent the situation was. This brave move shows that even the oldest and most well-known Wall Street companies are quickly switching to XRP, embracing the future of finance while the rest of the world waits. This has really big effects on people who own XRP and people who buy in it, because XRP is now the new collateral asset for US debt. Its worth is pretty much guaranteed by the huge size and stability of the US government's debt. This makes a floor price that is very different from anything else the crypto market has ever seen. Even the most optimistic predictions put the new value of XRP at around $10,000 per token. This number comes from doing some easy maths, dividing the $33 trillion bond market by the amount of XRP that is currently in circulation. This price goal is not just a bunch of talk, it is based on math and money. It makes sense that a digital asset's value would represent the amount of sovereign debt that backs it. In addition, Congress's action shows that blockchain technology will be used more widely at the highest levels of government and business. By adding XRP to the debt market, the US is setting itself up to be a leader in updating financial infrastructure. This will make deals faster, clearer, and safer. Hey, traders should pay close attention to this, because the bond market starts in a few hours and early signs show that the price of XRP will go up by at least 1,000% at the start. This means that there is a very small window of time for people who want to buy XRP or maybe add to their stocks before the market fully prices in this historic event. However, the effects are much bigger than just price. The programmable ledger technology behind XRP will completely change how debt is issued, paid, and checked. Costs will go down and governments and institutions will be able to work more efficiently. Investors will get more protection and openness than with traditional bonds. For small buyers, this is a pretty clear lesson. Now is the time to get ready for XRP's value to go up dramatically. If you wait too long, you might miss out on a huge wealth transfer when billions of dollars start pouring into products backed by XRP. In a wider sense, the addition of XRP to US debt markets could lead to a wave of other countries adopting digital assets, which would speed up the move to a global financial system based on blockchain. Because of this, XRP is not only a crypto asset, but also a key part of the future of banking. As we go through this news in more depth, we'll look at the congressional papers, the market data, and what actions by big banks like JP Morgan's purchase really mean for regular investors. We'll also talk about some safe ways to get into the market right now, which is a really exciting and risky time. In short, XRP taking the place of US Treasury bonds as collateral is a big deal that will cause the asset to be revalued in a basic way. Given the amount of debt involved and the fact that this is a first of its kind shift, the $10,000 price goal is actually too low. The market is moving quickly, and the chance to buy XRP at the current price is, well, running out fast. Stay tuned as we keep you up to date on this story that, quite frankly, will shape the future of banking. As of now, XRP is more than just a coin. It is becoming the foundation of a new financial order and the backbone of global debt markets. Thanks for watching. And remember that time is everything. Plan ahead and make smart investments. Nota bene, the only reason this movie exists is to teach and inform. It's not advice about money. Before you decide to invest, please do your own study and talk to a financial advisor.